This market will test you, not your strategy, not your chart reading, not your ability to predict the next candle. It will test you, your patience, your discipline, your emotional stability, your clarity under pressure. Most traders never see this truth. They think they're fighting the chart. They think they're fighting volatility. They think they're fighting the economy, the news, the algorithms. They're not. They're fighting themselves, and that's why they lose. Today, you and I are going to change that, not by giving you another strategy, not by adding more indicators, but by building something far more powerful, a psychological dashboard that reveals the real forces shaping your performance. 5 metrics, 5 mirrors, 5 psychological truths that expose exactly why you hesitate, why you break your rules, why you force trades, why you spiral after losses, and why success sometimes feels like it slips through your fingers, no matter how hard you try. If you've ever felt inconsistent, if you've ever felt out of control, if you've ever wondered why your results seem random, this video will show you the reason. Because your performance is not determined by the market. It is determined by the quality of your mind while you face the market. This is where real transformation begins. This is where you stop surviving and start mastering. This is where you step into the identity of a professional trader. Let's begin. You can't fix what you refuse to measure. And most traders never measure the things that actually matter. They measure the profit. They measure the loss. They measure how much they made today or how much they destroyed yesterday. They track their equity curve like it's a mirror for their self-worth. But profits don't shape a trader. Behaviors do. And behaviors come from the mind. Most traders don't fail because they lack strategy. They fail because they lack awareness. Awareness of their emotions, awareness of their impulses, awareness of the subtle mental patterns that quietly influence every decision. If you've been trading for months or years and you still feel stuck, inconsistent, or unstable, there is a reason. And it's not the market. It's not your strategy. It's not the financial news or the economy. It's the fact that you've been measuring the wrong things. A profitable trader is not built through magical indicators, secret patterns, or prediction tools. And a profitable trader is built through the internal metrics they track every single day. Metrics that reveal their discipline, metrics that expose their weaknesses, metrics that force them to confront the truth about their own mind. Today, you and I are going to build something most traders never even think about: your performance psychology dashboard. 5 metrics that determine 95% of your long-term success. 5 metrics that separate the emotional gambler from the emotionally disciplined operator. 5 metrics that reveal who you really are when the market starts pulling on your fears, your greed, your ego, and your doubt. Before we begin, I need you to understand something clearly. If you only track profit, your mind will always chase profit. If you track execution, your mind will chase discipline. If you track emotional state, your mind will chase stability. Your brain naturally adapts to whatever you measure. This is how psychology works. What you focus on expands. What you ignore decays. Most traders ignore their emotions, so their emotions destroy them. Most traders ignore their impulsive behaviors, so those impulses grow stronger. Most traders ignore the inner chaos that controls their decision-making, so that chaos becomes their default state. The market doesn't punish bad strategy. It punishes bad psychology, and it does so relentlessly. Think back to your worst trading day. Was it really your strategy that failed you, or was it your mind? Was it fear? Was it impatience? Was it revenge? Was it the quiet whisper in your head telling you, just one more trade? You can make it back. You know the truth. Losses don't destroy accounts. Emotions do. For the next several minutes, I want you to forget everything you think you know about performance. Forget the charts, forget the indicators, forget the technical analysis. Today, we measure the real drivers of consistency. The mental levers that shape every decision you make, the psychological muscles that separate the disciplined trader from the emotional one. These metrics are uncomfortable. They expose you. They force you to face yourself. They reveal why you're stuck, why you hesitate, why you break your rules, why your results feel random, why your trading seems predictable in hindsight but chaotic in the moment. You are about to see yourself clearly, maybe for the first time. If you're willing to look honestly, these metrics will change the way you trade. They will show you what's really happening underneath the surface. They will reveal the hidden patterns that cost you money, time, and mental energy. So let's begin. Let's build the dashboard that actually determines your performance, starting with the first metric, the one that silently controls everything else, the one that decides whether you trade with clarity or with chaos, your emotional stability score. Every trader thinks they're rational until the market exposes them. The truth is simple. You don't trade your strategy. You trade your emotional state, your entries, your exits, your risk decisions. Every one of them is filtered through the quality of your mind in that moment. Most traders don't realize this. They think the chart triggers them, but the chart doesn't trigger you. Your own unresolved emotions do. So the first metric on your performance dashboard is your emotional stability score. And this is where the brutal honesty begins. Emotional stability is not about suppressing feelings, and it's not about pretending to be calm. It's about recognizing what is happening inside you before it hijacks your decision-making. Because here's the uncomfortable truth. Your emotions fire faster than your logic. Your impulses react faster than your discipline. Your survival brain moves before your thinking brain wakes up. Every time you feel the fear of missing out, the panic of losing, the frustration of being wrong, the greed of wanting more, the shame of a dumb mistake, your brain shifts out of rationality and into instinct. Instinct is great for survival, terrible for trading. Let me ask you something directly. How many of your losing trades were caused by the market? And how many were caused by a moment of emotional instability? Think about it. The revenge trade after a loss, the oversized position after a streak, the early exit because fear tightened your chest, the late entry because hesitation whispered in your ear, the forced trade because boredom convinced you to just take something. These are not market problems. They are emotional problems. And if you don't measure them, you will always repeat them. Your emotional stability score is your mirror. It forces you to track the internal state that precedes your actions. Every day before you trade, you ask yourself, what is my emotional quality right now? Am I stable or unstable? Am I present or distracted? Am I grounded or reactive? Because a reactive trader is a dangerous trader. Not dangerous to the market, dangerous to themselves. Here's how instability shows up. Your breathing becomes shallow. Your thoughts start racing. Your eyes jump across the chart, searching for something, anything to trade. Your expectations rise. Your patience disappears. Your mind becomes loud. That's emotional instability. And if you take trades from that state, you're not trading with skill. You're trading with adrenaline. Let me tell you something most traders never hear. You don't need to fix your trading. You need to fix the internal state from which you trade. Your strategy doesn't need to change. Your emotional environment does. So how do you measure emotional stability? You rate it every day, before the session, during the session, after the session, 0 to 10. No judgment, just truth. A score of 8 to 10 means clarity, calmness, patience, control. You can see the market for what it is, not what your emotions want it to be. A score of 4 to 7 means you're functional but vulnerable. One unexpected move can tilt you off center. One loss can shatter your perspective. You're stable until the market applies pressure. A score of 0 to 3 means you should not be trading. Your mind is compromised. Your decision-making is polluted. Your perception is distorted. Your emotions are running the show. Most traders never stop to ask themselves, what state of mind am I actually in? They jump straight into the charts, not realizing they've already lost before they even press the first button. Markets don't destroy accounts. Emotional instability does, because instability leads to impulsivity. Impulsivity leads to overtrading. Overtrading leads to inconsistency. Inconsistency leads to self-blame. Self-blame leads to more instability. It's a cycle. And the way you break that cycle is by making your emotional state measurable. You cannot master what you refuse to see. And most traders refuse to look inward. They'd rather tweak indicators, test new setups, add more complexity, do more analysis. Anything but confront their emotional reality. Your emotional stability score is not a number. It's a compass. It tells you whether you are fit to trade or whether your mind is lying to you. When your stability drops, your risk should drop. Your expectations should drop. Your activity should drop. Because the most expensive trades in your entire career come from moments when your emotional stability was at its lowest. The traders who survive long enough to succeed are the ones who learn how to manage their mind before they try to manage their trades. So remember, this emotional stability is not optional. It is foundational. It is the starting point of consistency. It is the thing that determines whether you act with clarity or react with chaos. And once you begin tracking it, you will notice a pattern. Your best days are not the days the market behaved. Your best days are the days you behaved. Now that we have established the foundation, it's time to move to the second metric, the one that exposes the truth about your discipline, the one that reveals whether you are a trader or just someone who likes the idea of trading, your plan to execution ratio. You can have the most refined strategy in the world and still lose everything if you don't follow it. This is the brutal truth. Most traders don't have a trading problem. They have an execution problem. They know exactly what they should do, but when the moment arrives, their emotions take over and their plan becomes irrelevant. That's why the second metric on your performance dashboard is the plan to execution ratio. This metric reveals something that most traders never want to admit. You are either committed to your rules or you are committed to your impulses. There is no middle ground. Think about your last 100 trades. How many of them were executed exactly as planned? Not close to the plan, not somewhat aligned, not felt right at the moment. I mean exactly as written, the entry, the stop, the target, the risk, the setup criteria. If you're honest, the number is lower than you want it to be. For most traders, it's shockingly low. And that's the point. This metric exposes your discipline, not your knowledge, not your intelligence, not your technical skill, your ability to obey your own rules under pressure. Let me give you a truth that every professional lives by. A trading plan without execution is just a fantasy. And fantasies don't pay bills. Discipline does. The plan to execution ratio forces you to confront the moments when you betray your own system. Moments when you abandon the plan because fear whispered in your ear. Moments when you ignore the plan because greed convinced you the market owed you more. Moments when you rush into trades because your ego told you that you could make it back. Here's what most traders don't understand. Every time you break your rules, you're not just losing money. You're training your brain to ignore discipline. You're conditioning yourself to act impulsively. You're wiring the habit of inconsistency into your identity. Your brain adapts to what you repeatedly do. If you repeatedly break your plan, your brain learns to break it automatically. If you repeatedly follow your plan, your brain learns to execute without hesitation. This is why the plan to execution ratio matters. It tells the real story. It shows whether you trade from structure or from emotion. You track it with one simple question. How many trades today followed the plan I wrote down? Not the plan in your head, not the plan you vaguely remember. The actual written plan you committed to before the session began. A professional trader knows something amateurs never grasp. Your plan is only as strong as your willingness to obey it when the market pressures you to do the opposite. Let's be real here. You don't need more strategies. You don't need more indicators. You don't need more complexity. You need more obedience to the plan you already have. Profit comes from precision. Precision comes from repetition. Repetition comes from discipline. Your plan to execution ratio reveals whether you're building discipline or destroying it. Here's what the numbers mean. A ratio of 80% to 100% means you're consistent, you're structured, you're becoming dangerous in a good way. Your execution aligns with your design. Your behavior supports your success. A ratio of 50% to 79% means you're inconsistent. Your discipline is conditional. When things feel good, you follow the plan. When things feel uncomfortable, you deviate. Your progress will always be unstable. A ratio of below 50% means you're gambling. Even if you use technical analysis, your decision-making is emotional reactive, unanchored. Your outcomes will always feel random because your process is random. Most traders don't want to face this number because it exposes the truth they've been avoiding. They are the reason their trading is inconsistent. But here's the good news. When you begin measuring your execution, it automatically improves. Your brain hates seeing a low score. It hates watching itself fail. So it starts aligning your actions with your plan. This is how discipline is built, not through willpower, through awareness. Every day you write your plan. Every day you track your execution. Every day you expose the gap between intention and action. And over time that gap closes. And closing that gap is where transformation happens. Because a trader with high execution doesn't need perfect market conditions. They create consistency by being consistent themselves. When you fix your execution, your results stop feeling random. Your confidence stops collapsing. Your trading stops being emotional chaos. The plan to execution ratio takes away the illusion that the market is to blame. It puts accountability back where it belongs on your decisions. Now that we've exposed your discipline, it's time to address something even more destructive. Something subtle, silent, and incredibly costly. Something that ruins more accounts than any bad strategy ever could. Impatience. Your next metric is the one that separates professionals from everyone else. Your trading patience index. Patience. The most underestimated skill in trading. The one every amateur claims they have and every professional knows. They must constantly rebuild. If emotional stability is the foundation and execution is the structure, then patience is the space between your thoughts, the quiet, empty room where good decisions are born. Most traders don't lose because they lack knowledge. They lose because they cannot sit still. They cannot wait. They cannot tolerate the discomfort of doing nothing. That's why the third metric on your performance dashboard is the trading patience index. Ask yourself something brutally honest. How many times have you taken a trade not because the setup was truly there, but because you were tired of waiting, because markets moved without you, because you felt behind, because boredom convinced you to force something? This is impatience, the silent killer of accounts. Impatience looks harmless, but it is responsible for more losses than bad strategies, bad entries, or bad analysis combined. Because impatience rearranges your perception. It makes you see setups where none exist. It makes you justify trades you would normally avoid. It makes you act from impulse instead of clarity. Your trading patience index exposes this. It reveals the truth about your tolerance for silence, your ability to wait for asymmetry, your willingness to let the market come to you instead of chasing it like prey. A professional trader understands something that amateurs don't. Waiting is a position. Silence is a position. Not trading is a position. Restraint is a form of strength. Every day you measure your patience by tracking how many trades you took that met your highest criteria and how many you took because your mind couldn't handle the stillness. When you track patience, you realize your most profitable trades were never rushed. They were the ones that came after discomfort, after hesitation, after silence. But impatience is not the only destructive force. There is another one, a darker, more dangerous psychological trap. The one that makes traders blow accounts even when they're right about the market. It's inconsistency in risk. This brings us to metric number 4, risk consistency rate. Most traders don't lose because their analysis is wrong. They lose because their risk is all over the place. Tiny risk on good setups, huge risk on emotional setups, doubling size after a win, tripling size after a loss, cutting size out of fear, increasing size out of ego. Your risk reveals your emotional state. Your position size is a confession. It tells the truth about your confidence, your fear, your greed, your impulsiveness. You cannot become consistent with inconsistent risk. It is impossible. Listen carefully. If your risk changes with your emotions, your equity curve will reflect those emotions. Chaotic emotions create a chaotic curve. Stable emotions create a stable curve. Risk is not just a number, it is a psychological fingerprint. Your risk consistency rate measures how often you kept your risk steady following your plan. Professionals understand this deeply. Consistency in risk creates consistency in outcome. When your risk is stable, your emotions become stable. When your emotions are stable, your decisions become stable. When your decisions are stable, your results stop feeling random. Every day you evaluate one question. Did my position size follow the plan, or did my emotions choose it for me? This metric exposes revenge, trades the urge to make it all back. It exposes fear, trades the shrinking of size after a loss. It exposes ego, trades the oversized positions after a win. It exposes hope, trades the desperate attempts to get lucky. Risk inconsistency is not a trading issue. It is an identity issue. It reveals who you become when money is at stake. If you want to evolve into a professional, your risk must reflect your plan, not your emotions. So now we have 4 metrics: emotional stability, execution, patience, risk consistency. These 4 reveal most of your psychological patterns. But one final metric remains, and it is the most overlooked yet the most powerful. It is the metric that influences everything else. The state of your mind, your energy, your clarity, your cognitive sharpness, your ability to perceive the market without distortion. Your next metric is the one that determines whether you trade with vision or with blindness. Your cognitive clarity score. Clarity. It is the final piece of the puzzle and the most misunderstood. Most traders think clarity comes from chart patterns, from indicators, from analysis, from predicting what the market will do next. But clarity comes from only one place: your mind. And that is why the 5th metric on your performance psychology dashboard is the cognitive clarity score. Before you place even a single trade, You need to ask yourself a question so simple, yet so rarely answered honestly. What is the quality of my mind right now? Because if your mind is foggy, your decisions will be foggy. If your mind is rushed, your entries will be rushed. If your mind is tired, your judgment will be tired. If your mind is stressed, your trades will reflect that stress. You cannot trade above the level of your mental clarity. No one can. The market punishes confusion. It punishes fatigue. It punishes distraction. It punishes ego. It punishes the trader who thinks they can out-analyze their own distorted perception. Clarity is not a luxury. It is a requirement. Every morning, every session, every trade day, you carry the state of your mind into the market, and the market amplifies it. A clear mind sees what is actually there. A foggy mind sees what it wants to see. A stressed mind sees threats. A greedy mind sees opportunity where none exists. An anxious mind sees danger even when the setup is perfect. Your cognitive clarity score forces you to assess how well did you sleep, how calm is your breathing, how stable is your attention, how clean is your emotional environment, how sharp is your focus, how present are you really? Because trading is not about predicting the future. It is about perceiving the present with accuracy. Most traders trade with compromised clarity every single day, and they wonder why their results feel inconsistent, unstable, unpredictable. It's not the market that's inconsistent. It's their mind. Your clarity score tells you whether you are fit to operate or whether you're stepping into the market already impaired. Professional traders do one thing consistently. They refuse to trade when their clarity is low. They refuse to force performance when their mind is not aligned. They know that a foggy mind is more dangerous than any market condition. Because here is the truth. A clear mind can handle volatility. A calm mind can handle uncertainty. A disciplined mind can execute a plan. A patient mind can wait for the right moment. A stable mind can absorb losses without falling apart. And now you have all 5 metrics that reveal these states with precision. 5 metrics that expose your emotional patterns. 5 metrics that reveal your psychological weaknesses. 5 metrics that highlight your behaviors, not just your results. Emotional stability, execution discipline, patience, risk consistency, cognitive clarity. These are not just numbers. They are mirrors. They reflect the trader behind the chart. They reveal the identity that creates your outcomes. They show you in real time who you are when you step into the arena. Trading is not a battle against the market. It is a battle against the parts of yourself that are not yet disciplined, not yet stable, not yet patient, not yet aligned. Most traders lose because they fight the market. Professionals win because they master themselves. You are not here to chase profits. You are here to build the internal architecture that makes profits inevitable. You are here to cultivate the mind that can execute with precision, wait with patience, risk with intelligence, and perceive with clarity. The market rewards the trader who knows themselves. The market rewards the trader who tracks the right metrics. The market rewards the trader who is willing to confront their own psychology instead of hiding from it. So as you move forward, remember this: what you measure improves, what you ignore controls you. If you measure your mind, you will master your mind. And once you master your mind, you will master your performance. And once you master your performance, the market no longer feels like chaos. It becomes a canvas for your discipline. This is the transformation from an emotional trader to a professional one. Not because you found the perfect strategy, not because you predicted the market, not because you had a lucky streak, but because you built the internal metrics that make consistency possible because you focused on the only variable you can actually control yourself. This is your performance psychology dashboard. These 5 metrics are your roadmap. Track them, study them, live by them, and watch how your results begin to shift slowly at first, then all at once. The market does not create great traders. The mind does. And now your mind has a blueprint to become unstoppable. You now have the blueprint. 5 metrics that reveal the truth about how you think, how you react, how you behave under the pressure of uncertainty. Most traders will ignore this. They will keep chasing indicators. They will keep chasing shortcuts. They will keep chasing profits without ever understanding the mind that generates those profits. But you're not most traders. You've seen behind the curtain. You've seen the patterns that shape your decisions. You've seen the behaviors that determine your outcomes. You've seen the psychology that controls everything. The question now is simple. Will you measure it? Will you confront it? Will you build the discipline to track what truly matters? Because the trader who measures their mind masters their mind. And the trader who masters their mind becomes unstoppable. The market will continue to test you. It will push you. It will challenge the edges of your patience, your clarity, your composure, your discipline. But now you have the tools to meet that challenge with strength instead of emotion. Your journey from emotional trading to psychological mastery begins with these 5 metrics. Track them, study them, live by them, and watch your performance shift from chaos to consistency, from reaction to intention, from uncertainty to control, from fear to mastery. This is mind over markets, and your mind is now your greatest edge.